wise man once said, it's got to be the shoes. That's what we're talking about here on Bullhorn today. Nike, Steve Madden, a bunch of other footwear stocks are just flying. Howard, what are people talking about there?
Well, they've been talking about it a while. It's kind of one that's baffled me. Shoes are obviously, I guess, in a way, a staple. There's Steve Madden, there's Nike, there's Deckers. Crocs has actually come back from the dead from $1 to $12. Those are some amazing moves.
Yeah, I guess with Nike, you talk about it. Obviously, it would seem to be a commodity, but look at sneaker prices. Clearly, they've got some pricing power.
They've gone up the food chain and down, but they also bought Converse.
Yep.
So, and those kind of moves have helped Nike. Plus the weak dollar, plus the emerging markets. Shoes, make the outfit, and shoes right now seem to be making people's portfolios.
No, definitely. And there's a lot of emerging market strength, I think, particularly with Nike as well. Are people talking about that specifically on the stream, that a reason to own Nike, some of the other shoe companies, are because of China and emerging markets and not really U.S. and Europe?
Yeah, I mean, there's general pricing pressure down on the production side, obviously, because China has capacity issues too and production issues. So prices continue to get cheaper in a dollar basis to bring it back over. And then on our end, the demand seems high. It could be skinny jeans. It could be, I forgot to mention, it was Cole Haan that Nike owned.
Right.
So, I mean, they've moved up the food chain. The pricing power still seems to be with them. People love their shoes, and there's a lot of technology in these shoes,
right.
And he's just been able to execute.
Great. Well, definitely. We talked about China obviously being one reason to own these companies, so let's move on and talk even more detail about China. Baidu continues to surge. There was a hot Chinese IPO this week, a fast food restaurant company. What are people on the stream talking about in terms of Baidu and other Chinese ADRs?
Well, it's a little giddy. It's a little happy. And again, the stream, I love checking in and just kind of feeling the sentiment. Nothing's perfect, but I like to get a feel for what people are thinking. And I think it's gotten a little too easy out there. Baidu has a run of China. They own the social vertical. They own search.
Yep.
Google pulled out. Google sold their stake in Baidu. So basically, it's a declared monopoly for Baidu. So it's very hard to value the stock. Stocks go up when they're very hard to value because stocks surprise. On the IPO side, it's fun to see, but it's also stressful to miss such great meaty moves. And, you've got to watch the IPO market, and you can follow that on CNN Money, you can follow that on StockBits, but you can find out who's coming public.
Oh, definitely, yeah. And it's a great point. You have to be extremely wary of IPOs after they start trading. A lot of times you get that first day pop. Granted, we're not seeing the 1998, 1999 triple-digit percentage moves anymore, and thank goodness, because that was completely ludicrous. But clearly, anyone that's looking at an IPO, even if it's in a hot market like China, you got to pay attention, do your homework. So I think that pretty much wraps things up for here. So look forward to chatting with you again sometime soon.
Okay, thanks, CNN. See you Friday.